Hi guys, it's Chris. Today I will show you the complete process to analyze a stock, and I will use the tools that I've shown you in the masterclass. If you haven't seen the masterclass already, I encourage you to pause the video right now, watch the 7-hour masterclass on my YouTube channel, and then come back to this video because I've covered all the tools we will use today, and if you've seen the masterclass before, you will understand way better what I'm going to do right now. So I will just go back to the template that I've shown you in this masterclass. And as we've seen in the course, well, the first step of the idea generation process is to start with the companies you're familiar with, the products you know. And you start from here and you look at the numbers and you go to the watch list and invest in the stock. But the first step is to find the easiest company, the simplest company. So we'll make this video today on a simple company. We will not talk about rocket companies. We will not talk about Biogen pharmaceutical companies. A product that I know really well is the Monster energy drink. And there is a company behind these products. And if you just type Monster drink, you will find, and I'm sure that you are all familiar with this product, the equivalent of Red Bull, and I think they have one product, just these cans of different flavors, and they just sell energy drinks. But I'm not very familiar exactly with the business model, the distribution, the competitive advantages. I just know that this company sells energy drinks, so the business model seems quite easy to understand. If you go back to this page document, the first step is to see if you understand the business correctly. To be sure that you really understand the different products, you just go to the company's web page. This is in French. Let me change to English. Accept this and okay, English. Okay. And similarly to Red Bull, they have a lot of event sponsorships. Let's scroll down. You have different energy drinks. Okay, okay, okay. All products. Let's see other products. Maybe they sell, I don't know, lawn mowers. I don't know, but okay. You have the Monster Energy, Monster Ultra, which are energy drinks. Java Monsters, just different flavors. MO. Okay, what's that? Blue Eyes. Hydro. Okay, okay, okay. With a bunch of calories, very well. So they don't diversify into different industries. They just focus on the energy drinks market. And that's good news actually, because that's much more simple to understand. If I go to Unleashed, they have music. Oh, that's all the sponsorship that they have. Promotions, what's that? Okay, gaming sponsorship, where to buy. I believe you can buy Monster energy drinks everywhere in the world. Okay, so you have a bunch of companies that distribute these energy drinks. Maybe that means that there is no Monster Energy store. There could be some Monster Energy store where you can only buy Monster Energy drinks, but I don't think that's the case. I just think that you can buy on Amazon, Walmart, etc. in France, Auchan, Carrefour, etc. So the first step of this document is to see if we understand the business. Apparently, it's very easy to understand. They sell energy drink and they don't have stores. And now that we've seen the website, let's type Monster. What's the name of the company? Monster Stock. Monster Beverage. Okay, so this is the stock price, by the way. You can check the stock price. I know it's a wonderful business with a wonderful track record, and if you bought in 1985, you would have a gain of 76,000. So what's that? 700x your investment. But I've never analyzed the business in details, like the revenue, the margins, the competition. I just know that it's a simple business, but that's the opportunity for me to analyze this business. Okay, so Monster Beverage, let's see investor presentation. Investor presentations are slides, PowerPoints that are made by the company, and they talk about their strategies. They talk about what they plan to do in 3 years. They talk about their different operations. You have a rough idea of the different products they sell and the strategy of management, the sponsorships for this kind of company. And we have 67 slides. Okay, so just to be sure we really understand the companies, okay, geographical, how it works, different products, different margins, and you can get a lot of good information with investor presentations. And especially for beginners, I think that's a good starting point to just check the website, see if you understand what the website is about. Okay, they say energy drinks. And now they will talk numbers. Okay, beverage landscape. Let's see, they talk about the industry, total non-alcoholic beverage by category. Okay, so that's non-alcohol. They are here. Okay, so you have some good stats about the industry. Energy drinks are 20% of the whole industry of non-alcohol beverage. Was that okay? Change total non-alcohol beverage category. Volume, okay. No, not important for me. All measured channels snapshot was that TNA energy. I don't know what TNA is. TNA energy. Maybe that's just total non-alcohol energy. I think that's it. Okay, so this is still about the industry. And this is all the energy drinks that are without alcohol. Monster is here, and I don't really know what does this mean. Maybe this is the whole industry, and Monster has this volume of turnover. And if you compare to the total industry, you can get a fair approximation of the market share. For example, you have, I don't know, what's that? Let's check. What's that? This 1.5 divided by 5.124, and that's roughly 30%. What does it mean? Maybe that in this industry, Monster Beverage has a 30% market share. That's a good question. What's that? Total US dollar share. I think that's it. Monster Energy, 30%. Okay. And who are the other players? Red Bull, obviously. Okay, so in terms of competition, you can already say that Red Bull is bigger than Monster Beverage in terms of cans that they sell, like turnover, revenue. And what's that? Total market. What's that? MEC, I don't know. And now they talk about the energy drinks market. Again, same thing. So again, same thing, I suppose, but you understand the dynamic of the competitive landscape. Okay, fair enough. Now they talk about distribution. Monster is now distributed to 144 countries. That's good to know. Strategic brands, 64 countries and territories. Okay, Reign is now distributed in 25 countries. I don't know what Reign is. Let's just copy it. Reign Monster. What's that? Okay, that's a kind of drink. Okay. Affordable energy. Okay, lower cost is now distributed in 37 countries. One or more of the company's energy drink are distributed in. Okay, so they cover 150 countries, the whole world basically. Almost all countries. Okay, strategic brands. Some, I believe, some strategic brands. Okay. Okay, maybe that's branches of the drink. I don't know. They will talk about it later. Affordable energy. Okay. Affordable energy expansion markets. So that's their plan for the different countries. Select market snapshot year to date. Okay, so that's the evolution of their growth among a lot of countries. That's a lot of information if you want to dig deeper and see where the growth is. Maybe we'll use these data later, but for the moment, it's just to understand how everything works. Updates on China: steady and sustainable growth of Monster and launch of Predator, which is, I believe, one of their drinks. Okay, sports, China drinks, updates about drinks. Okay, let's continue. Major sponsorships, yes. Ambassadors, let's continue. Champions, sports. Okay, music, social. Okay. They have a lot of presence, like Red Bull. They are everywhere, especially in sports. Retail promotions. All right. Okay. Drinks. Sports. Gaming. Social media. Okay. They have a lot of focus for social media, sports, gaming, and they are available in every country. Get after it. Full throttle. Okay. That's National Flag of Valor program. Okay, relentless sports, DJs, music. Okay, wow. Most of their slides are about the sponsorships they have. Again, some events. Let's see. The Beast Unleashed is the best-selling new beer brand of 2023. That means they sell beer. The Beast Unleashed. What's that? The Beast Unleashed. Let's see. Okay, so it's written in French. They sell Monster Energy starts a product with alcohol. So they go into the alcoholic business. Okay, good to know. Good to know. Based and display activity. Okay, marketing, new products. Okay. Digital content. Production facilities. So they plan to, what does that mean? They have 4 plants. Okay, they have 4 facilities, not only in the US, also in Ireland, where they build their cans, they create their cans. Sustainability report, sustainably recyclable aluminum cans, equity, diversity, and inclusion. What do we have here? Council bill, charity priorities, okay, global philanthropy support. Okay, it's good to know, especially when you start to sell alcoholic products, your score of your environmental social score can decrease. So you would better invest in philanthropy. Maybe that's why, maybe not. I don't know. Solid financial results. Okay, that's where it gets interesting, and this is the 65th slide. So what do we have? 31 consecutive years of increased sales. Impressive. Since the acquisition of the Hansen Beverage business in 1992, achieved 6 billion in net sales in 2022, achieved 1 billion in net income, achieved $1 in diluted EPS in 2022. Okay, maybe that's not up to date. That's not the latest investor presentation because they talk about 2022, but you get the rough idea. For the 9th month ended in 2023, achieved this billion in sales. We'll see that later. Subsequent to the company earnings release, the company is purchasing approximately. Okay, you have some buybacks, and that's it. So, not much information about financials and their strategy. Well, no, you have a lot of information about their strategy, which is sponsorships, promotion, marketing, sports, gaming, digital content, and a lot of new drinks. And they start to sell some alcoholic beverages and they want to invest in China, but they sell these cans in more than 150 countries. Okay, and that's the business that is growing for 30 years. That's what you can get out of this report. You don't need to go into specific numbers. We will use other websites to do that. So let's go back to our template. Do we understand the business? Seems correct to me. Well, it seems simple to me. I don't know for you guys, but it seems quite easy to understand for me. They sell different flavors of energy drinks. Okay, if yes, analyze the numbers. GuruFocus, ROIC.ai, and macro trends. Let's start right now. Let's go to, you know what? Let's just skip this. GuruFocus, Monster Beverage. Let's see. You have this page. You have the evolution of the stock price for 10 years, for all, if you want to see the beautiful stock price evolution over time. What does this page give you? The PE ratio of 40, market capitalization of $64 billion. So this is not a small company. That's a big company. And if you scroll down, what do you have here? Gross margins, 50. Operating margins at 27, okay. Return on invested capital, 30%, okay. PE ratio, 40. Forward PE ratio, so the earnings for next year with all the forecasts that Wall Street makes. So they estimate that the PE for next year's earnings will be 33. PEG ratio at 5, okay. Price to free cash flow, 43, okay. Current ratio at 5, that means I don't think they have a lot of debt. If you scroll down, you see what is really interesting. Sorry for the pop-ups from GuruFocus. It's just that for the free version, you will have many pop-ups. Oh, that's beautiful. That's beautiful. Here you have the revenue, the net income, and EBITDA. I don't like EBITDA, so we'll just remove it. And if you look at the revenue over time, you see that it is up and to the right. Same for the net income. Oh, what happened? Net income has not changed since the pandemic 2022. Okay. Cash, there is no debt. No debt. They have 3 billion of cash. And if you want to get more precise, you can go to quarterly to get the latest data. And you have, okay, 3 billion of cash for a market capitalization of 64 billion. So the balance sheet is not big. It's quite small actually. And if you scroll down, you look at the free cash flow. Let's remove this, operating cash flow and free cash flow that are coming from the cash flow statement. And you see that that's quite volatile, but that's up and to the right. Roughly speaking, they generate, I don't know, 1 billion, 1 billion of free cash flow. Okay, so not a lot of free cash flow compared to their net income that you can also see here. Net income is okay, 1 billion. And you have a rough idea of the return on invested capital here at 30, 30%, I would say. And just below, you see if they did buybacks or share issuance. What is happening here in 2015? They increased their share count by 21%. That's strange. Maybe they did an acquisition. I don't know. And you have some buybacks. They bought about 4%, 1%. And in the last year, in 2023, they bought back 0.3% of their shares. So not a lot of buybacks. And what is happening here in 2015? In 2015, you see that you have more assets. So I think they did an acquisition here. And that's also the reason why return on invested capital decreased, because the formula for return on invested capital is just a division. And if you increase your denominator, if you increase your assets, well, you get a lower ratio. And do we see a good increase in revenue in 2015? No. We just see that there is less cash. So maybe they bought, with the cash they had, they bought something which increased the assets. And because the assets increased, the return on invested capital decreased. I think that's how it works. But the big idea here is that they don't have debt. They have some cash and they are growing nicely year over year. So that's great. I think we're done with GuruFocus. We have more information and I like what I see. I like what I see. Let's keep going. ROIC.ai. Okay. ROIC.ai. Here, let's go to Monster Beverage. If I click here, summary. Okay, so log scale, nope. What do we have here? Revenue per share, I like it. I told you in the masterclass that in this website, the data is not 100% accurate, but I think that's enough for a free website to have a rough idea of the numbers. For example, you have a revenue per share here that increased from 1.6 to 6.8 in, I don't know, 12 years, 13 years. And if you look at the basic EPS from 0.3 to 1.5, so multiply by 5. And free cash flow per share, same thing, multiplied by 5. Basic weighted average shares, so the share count that has not done anything in the past decade. Let's look at this. You have some increase here. As we've seen in 2015, we have something. And then some buybacks to come back to approximately 1,000 shares. Operating margins here have grown from 27 in 2011, 30, 35. Oh, wow, that's great. And then the pandemic happened, 35, and go back to 27. Okay. What that net income? Okay, very good, growing nicely. The effective tax rate, this is a business that is taxed 30%, 35%. And then I don't know why in 2019 the tax rate, no, in 2018 the tax rate went from 30% to 23%. Okay, 13%, 25%, 20%. So there is a change in tax rate here. So maybe the growth in earnings in the past few years is due to this change in tax. Maybe we'll have to dig deeper into this. Profit margins here, 70%, 25%, 22%. Okay, so overall growth. Long-term debt completely empty because we have no debt. Total equity, return on invested capital, 30%, 15, 20, 25, 30, 20. Okay. Return capital here. This is approximately the same formula. You can twist everything here, but you get a rough idea of the numbers. You don't have a return on invested capital of 5%. You get 25% on average. Return equity, let's see, 30%, 40%, 20. Okay, so between 20% and 30%, I would say. Fair enough. I like it. Growing nicely. There are some questions here to ask, like what happened to the share count is 2015. What happened? Was it an acquisition or something else? You have another question with the margins. Why do you have these evolution of margins over the past 10 years? What happened? Maybe it's a change of strategy. Maybe there is a change in management. Maybe there was a competitor that entered the market, so everybody had to decrease their price. I don't know. But roughly speaking, you have some very good numbers. And the other website is Macro Trend. So let's go to Macro Trends, Monster Beverage. Monster Beverage, Macro Trends. Okay. This is the stock price. Let's go to revenue and profit. This is the revenue over time. You see the evolution here. So growing 10%, 9%, 12%. Don't be afraid of this website that is lagging. It's not you, it's the website. Earnings per share here. Don't be afraid of all the pop-ups. I told you in the masterclass, this website is free, but you have a lot of ads and the website is lagging. But I like it. So, okay, EPS growing 15%, some decrease in 2022 and then a comeback. Okay. Share price. No, I want to see the PE ratio evolution over time. I think in Guru Focus we saw a PE ratio of 30, 40. I believe it was 40. And let's see the evolution of PE ratio over time. So you have the price, stock price here, the earnings per share. And if you divide this price by the earnings per share, you get the PE ratio. Let's remove this ad. The P ratio, okay, in 2009 it was 20 and then 25. Oh wow, and it's 60, 50, 30. Okay, this business is definitely never cheap. And I think the reason why it's never cheap is that this business is strong and everybody knows this business is strong. This business has been growing for 30 years, maybe slowly, maybe rapidly, but growing nicely. And you will not expect a decline of 50% of earnings. So you have some resiliency, you have some good management, good industry, and that deserves a premium. That's why this business doesn't have a PE of 12 or 13, something like this. But yeah, a PE of 40 is definitely expensive, I would say. Let's see the price to free cash flow. Maybe we have a different picture here, but I think it will follow the same trend. Okay, you have some change in free cash flow in 2016. Again, another question. What happened in 2016? There was an acquisition, but maybe some inventory stuff. They had to stock more inventory. I don't know. And you have a price to free cash flow 30, 25, and then right now is at about 40. But on overall, despite all these challenges, that's not challenges, that's just questions that you will have to answer later in your analysis. But in overall, I would say that I like the numbers, so let's go deeper. So let's go to Stock Unlock to see what they have to say about it. Stock Unlock is a website that I like a lot, that I use a lot. I'm writing a newsletter for them, for this website. And you have a link in the description below if you want to sign up to get a month free. You just try it out and see if you like it. I'm here on the page for Monster Beverage. What's the dashboard about? You have the stock price for the past year here. Max is here. Percentage has changed. Okay, very well. The insight score is 4.3. So very good insight score. If I scroll down, what do we have? Earnings, revenue, insider transactions. You have some people from management that sold some stocks in 2015, 2016. There is definitely something happening in 2015. And if you go to here, key data and metrics, you have the market cap, 60 billion. Industry beverages, EPS 1, forward P 33, P ratio 38. You see that's not exactly the same as we've seen in previous websites like GoFocus, MacroTrends, but you get the same direction. You get the same kind of information. So something that is expensive and growing quite decently. If you click insights here, you have a lot of very good insights. Let's look at the bad ones. Very bad ones. There is no very bad insight. There is one bad insight. What's that? Intangible as a percentage of assets. Okay. Again, this raises a good question. If you click on the question mark, this company's goodwill and intangible assets make up 30% of total assets. Okay, in the masterclass, I told you that goodwill is when you want to do an acquisition in 2015, for example, and you want to buy something, and this something has a balance sheet of 1 billion, and you won't buy this company for 1 billion. You will pay a small premium. This difference between the price and the balance sheet, this is the goodwill. So if the balance sheet of something is worth 1 billion, but you pay 2 billion for it, well, the gap is the goodwill. You have 1 billion of goodwill. And if the goodwill of Monster Beverage is high, is because maybe they paid a big premium to the late acquisition they did in 2015. And because this is an asset-light business model, because we've seen in the investor presentation that they had 4 plants, well, you can say this is an asset-light business model with high margins, and you don't need a lot of workers, employees, plants, machinery. So, relatively speaking, the goodwill is a big part of your total assets, and that may be a bad sign. We will have to dig deeper into this. Again, that's another question that is raised. Typically, investors prefer companies that have more tangible assets because it simply means the company has more real assets on the balance sheet. Yeah, because goodwill is not real. That's the premium you paid in the past years. Very good, everything. Very good, very good. No debt, shares decreasing, some buybacks effectively, revenue increasing, profit increasing, gross margins, good. Valuation, okay, they consider valuation as average. And indeed, there is a very bad insight, which is the free cash flow risk premium. So that means that valuation is high. Return on invested capital, very good, very good. Okay. If I look at here, okay, very good, everything. Okay. So from this tab, you can conclude that Monster Beverage is a very good business. If you have a lot of good insight score, it means every metric is going in the right direction. You can look at financials here to look at key metrics over time. If you want to dig deeper and you want to see data from 2004, so basically every metric you see is going up and to the right. What do we have here? You know what? Let's go and see the balance sheet to analyze the goodwill. So we'll have our response quite quickly. Liabilities, okay. So they start from 2004 and to the right we have next years. Okay, let's look at this. Non-current asset, we have this line for goodwill. And effectively, before 2015, you had no goodwill. So you have a fair probability, a fair chance that they didn't do acquisitions during that time. And then they did their first acquisition in 2015, as we suspected. And from zero, you have 1 billion in goodwill. Okay. And then it grows a little bit and then stabilizes. No acquisition. And then increases a little bit here. Very good. And that's why we saw return on invested capital, return on assets that decreased in 2015. That's because of it. Very good. If you look at the current assets for the business, if you look at the big picture of this company, if you look at the assets, well, that's 10 billion. Half of it is current assets. You have 2 billion of cash. And if we go to a more precise metric on a quarterly basis, so more recent data, you have 10 billion of assets and 2 billion of cash, 1 billion of short-term investments. That could be treasuries, so you could assimilate it to cash. So 3 billion of cash, as we've seen in previous websites. Net receivables here at 1 billion. And if you don't know what net receivables here, it is the total amount of money the company is owned. This is similar to account receivable, except it records some obscure amounts reported by different businesses that might not always be aligned strictly to account receivable, although it's still reported as receivable by the company. Another way to think about receivables is money that should come back to the business one day in the future, which is why it is reported as an asset the company holds. So they sell some energy drinks to a business in France, for example. France say, okay, we will not pay you right now. Wait 2 weeks and we will pay you later. Well, that's it. That's it. That money that you will get in the future, but you don't still own it. So it's not cash, but it's money that is owned and you will get it in a few weeks, in a few months. Inventory here and other invents. Inventory is the stock. Inventory is the products you have. So 1 billion worth of cans that they own. Non-current assets have 1 billion of property, plant, and equipment. So they have 4 plants, 3 in the US, 1 in Ireland, I believe. And that costs the 4 building sites, the 4 plants, they are worth 1 billion, which is not a lot. If you have 2 billion of cash, you can say that relatively speaking, it doesn't cost a lot of money to run these 4 plants. Long-term investments, that's minimal, so not worth digging into it. Goodwill, we've seen that you have more goodwill than property, plant, and equipment. So yeah, that's why we had these bad insights of, hey guys, goodwill is really high compared to the total assets. That's why it's because the plants, well, it doesn't need a lot of money to be run. Intangible assets, I believe that the brands, the patents that they have, and that costs some money. 1.5 billion. Okay, that assets. If you want to go deeper and see what's inside the intangible assets, well, actually, if you want to go deeper, you can go to the annual report, a document of hundreds of pages. It's in the official website publicly. You go to intangible assets and you will see how much is worth your brand. For example, the Coca-Cola brand is worth a lot of money. And I don't know, the Red Bull brand is worth a lot of money compared to smaller niches, smaller companies. The brand is worth a certain amount of dollar. And in this case, and you know what? I'm doing the analysis for myself. So I'm curious. And let's just go to Monster Beverage annual report. Oh, wow. Annual report, I don't know, the latest one. I don't care much. I just want to see what's inside the intangible. 2022, okay. You just do Control F. And you know what? Intangible assets. Intangible assets here. 20 results. Let's see what's inside. I expect a table. A table here. That's your balance sheet. What's inside? What's inside? Goodwill and other intangible assets. Goodwill is, as I told you before, acquisitions. Here was that goodwill and other intangible assets here. Okay. Inside the goodwill and intangible assets, you have the brand Monster Energy Drinks that is worth 1.5 billion. You have the strategic brands, so the names of other stuff, alcohol brands here, but that takes into account goodwill. I don't want it. Let's see what we have for goodwill. If we have maybe the cause of goodwill. What do they say? The company records goodwill when the consideration paid for an acquisition exceeds the fair value of the net tangible and intangible assets acquired. So the premium you pay. Okay. Okay, very well, very well. Let's continue. Goodwill is 1.5 billion. What do we have here? Goodwill. Okay, that's again the definition. You can get lost quite easily when you look at an annual report. There are 130 pages for this one.
Hi, it's Chris from editing. I think I missed this information during the video, but in this page, you see that at the top of the screen, you have the following table summarizes the final fair value allocation for a transaction, for an acquisition, and you see what is bought with the acquisition. And in this table, you have intangibles, trademarks, intangibles, customer relationships, intangibles, permits. So that's part of the intangibles. So I would say the intangibles are all these things: the brands, trademarks, customer relationships, and permits.
Okay, let's see what we have here. No information for the goodwill, Monster Energy Drinks acquisition. They bought something for alcohol brands recently. Let's continue. Let's continue with the liabilities just to check current debt. There is almost no current debt. Accounts payable, so that's the opposite of accounts receivable. Instead of having money that will be paid to you, well, that's money that you have to pay to others. And you say, okay, I will pay you in 3 months, don't worry. But that's money that will be paid later. Long-term debt, absolutely nothing, which is quite good. Shareholder equity, return earnings here. Okay. No red flag here. Cash flow, dividends. I don't know if the business pays a dividend. The company has never paid a dividend. Okay, that's very clear. analyst here, what do we have? That's the recommendation for analyst. Everybody thinks the company will continue to grow. That's a very simple bet. So if the company has grown 30 years in a row, well, you can expect the company to continue to grow. Inside, what do we have? What do we have? Ownership. So let's see if the CEO of the company owns a lot of shares. To see, so Coca-Cola owns 20% of Monster Beverage. You have here some big hedge funds, some big mutual funds. Show only owners working for the company. That means that the co-CEO, there are two CEOs here and here. They own 0.2%, 0.1%. Okay, not a lot of insider ownership. Was that insider transaction? And as we've seen before, I think it's in general. If you scroll down, you have some insider trading here, quarterly, yearly, okay, but nothing very significant because they don't own a lot of stocks. So, okay, you would always prefer a management that owns a lot of stocks, a lot of shares, that has a high insider ownership. So their interests are aligned with yours, but okay, you have a fair amount of information here. Let's go back to our template. We've seen some good numbers. We've seen some good information on Stock Unlock. With the insight score, we raised a question about intangibles. What's about intangibles? And now let's see the freeform tool. Maybe that's the tool that I prefer on Stock Unlock, because when you see these graphs over 20 years, let's see, 20 years, well, you have the CAGR, the compounded annual growth rate. So if you look at revenue since 2004, since 2004, revenue has grown 23% per year. That's insane. That's insane. Insanely good, I mean. Let's see, what do we have here? If you want net income, you have net income that has grown 31% per year for 20 years. If you want to see the PE ratio for 20 years, this is the line in yellow. I don't know why you don't have the data here. The data starts 20 years ago, so let's go to 2004 approximately. Okay, and we have PE ratio, what's in yellow, 33, and then 12. You know what, let's remove revenue net income. Okay, so during the Great Recession, the business was cheap, 12, and then 17, and then pricey, and then 15, and then 30, 30, 40, 30, 30. Okay, very well. And I think that these presets are new on Stock Unlock. Let's look at this. Dividend seekers, no dividend, so no dividend for us. What's that? Free cash flow per share. Nope. Profitability focus. Oh, okay. It will show me the graphs for profitability. So gross margins that are in green, 50%, 50%, 52%, 50, 60, 50. So relatively stable, I would say, 50%, 60%. You have the operating margins in blue, so stable at 25, 30, 25%. The return on equity in red, which evolved a lot and went up 50% and then 10%. Okay. Let's remove the P ratio and let's look at other presets. Cash flow enthusiast. Here, what do we have? The operating cash flow over time growing. So the company generates a lot of cash over time. And this operating cash flow growth has been 31% per year, 32% per year, actually. That's insane, insanely good. Free cash flow margin here. Oh, no, let's first start with the free cash flow here, growing at 32%. Wait, okay. Operating cash flow follows the free cash flow. Okay. You have some drop in 2022. This raises another question. What happened in 2022? And why does your business that is resilient, Why did it drop in 2022? What did you do in 2022? And the free cash flow margin is 15%, 15, 20, 10, 15, and then it grows for some reason in 2016. Maybe this is because of the acquisition they made in 2015 and the business changed with more cash generation. I don't know. 30, 25, 30, everything dropped, and then 20. Okay. And finally, the margin mastery. Okay, we know these numbers: gross margins, operating margins, net margins. Okay, we see that the margins have not changed for 20 years. Slightly increased, but quite stable, I would say. So with this website, we have some good information of a nice business that has grown for 20 years in a row, generates a lot of cash, and since 2015, well, something happened. We have to look deeper to dig deeper what happened later. But I would say that the business is very strong, very resilient. And that's, I believe, the reason why the PE ratio is 30 and not 15. It's not a normal business. It's not an okay business. It's a business with one product with different flavors, but one product that has grown 30% per year for 20 years. 20%, 30% per year for 20 years, which is a lot. And investing, sometimes you only need one investment. If you find one Monster beverage, and if you had invested in Monster beverage in 2000, well, you would have outperformed almost everybody. Let's see the stock price. The stock price here, over 20 years. This is beautiful. The compounded annual growth rate of the stock price have been 32%. And this is very, very good. If you had invested in Monster Beverage 20 years ago, you would have a 30% return, annual return for 20 years. So let's do compounding. Let's check compounding calculator, compounding table if you want to check it out. And if you had invested, I don't know, $1,000, where is it? Let's check the compounded interest calculator. If you had invested, that's some cookies, okay? If you had invested $1,000 for 20 years and you have an interest of, let's say, 30%. No deposits, no deposits. Okay, you would have, where is it? Calculate. Okay. I don't know, compound interval. Let's say you had invested in $1,000, 30% per year for 20 years. You would have almost 200K, $200,000. So that's a lot. And that's the beauty of investing. Sometimes you just find a good business and you just enjoy the ride. So it's a 200x over 20 years. And if you want to compare this growth to other businesses, Microsoft, for example, let's look at this and compare the returns if you had invested. Okay. Okay, you don't have the same starting point here. Let's just compare the CAGR. If you had invested in Microsoft in blue, you would have 15% per year compared to 32% per year for Monster Beverage. Okay, fair enough. That's a good outperformance. Let's compare it to Amazon. Let's look at the compounded annual return. In blue, Amazon, you have 26, 27% per year. So if you had invested in Monster Beverage, you would have a better performance compared to if you had invested in Amazon. And that's not the same starting point here. That's why this chart may be misleading, because your starting point is not the same. It's 0.3 versus 1.8. So just think about compounded annual growth rate. We have some great information. And if you're a beginner and this is a tutorial for you how to pick stocks, how to analyze a stock, I think that's a great start that you've reached this point at the video, because we've covered a lot of things: balance sheet, cash flow growth over time, the different margins, margin evolution over time. That's some good things to monitor. And let's go back to our document, our template. If you like the numbers, add to the watch list. So for me, I will add it to my FinChat watch list. And the next step is to see if the company has a competitive advantage. Let's see the moat. Let's see if Monster is different than Red Bull or Coca-Cola or other beverage companies. I think that Red Bull, is not a listed business, so it's not a public company. So you won't get any financial statements for Red Bull compared to Monster Beverage. So it's quite private and it will be hard to compare margins between the two businesses. But what we can do is to go on Stock Unlock, go to this tab of Monster Beverage and look at the potential competition that Stock Unlock gives us. If you scroll down, you have these companies. Out of these companies, I suppose that you know PepsiCo, you know Coca-Cola, and I know Celsius Holdings, beverage, energy drinks also, and National Beverage Corp. But you have other businesses here. What takes a lot of time if you want to go deeper into competition is to check all these businesses and compare the numbers, compare the margins, compare the products for each of these businesses. It may take a lot of time, but that's how you do the work correctly. I will show you quickly how it is done. And now in this tab, I can compare the margins over time. Let's see, it's loading. You have the stock price for everything, the stock prices, sorry. And if I want to compare the margins, let's see the gross margins over time for all the competition, all the competitors. Wow, that's a mess. That's a mess because you have a lot of competition. I don't mind. Let's go back for 20 years. What you see is that all these businesses have different margins. You have some pink margins that are down below 20% that went up. You have some other businesses with stable margins at 60%. What could be really interesting is to see the higher margin businesses. You see what is at 64%, KO. That's the ticker symbol for Coca-Cola. And you can conclude that Coca-Cola has a gross margins which is superior to competition. And if you see in the latest data, so here at the end of 2023, what's the best, what is the company with the highest gross margin? Well, you have PRMW, I don't know what's that. You have PepsiCo at 54%, Monster Beverage at 53%, Coca-Cola at 60%, which is really good, and KDP at 54%. Okay, that's quite intriguing. Let's go to PRMW. What's that? What's this one? COT. Okay. Canadian company, beverage, sodas, energy drinks. Okay, and this is the stock price. I can guess from the stock price over time that revenue has not increased for 30 years in a row. I agree with you. Right now, it's a mess. And if I just want to compare Monster Beverage with main companies, I would say KDP, Coco, I don't know this one, PepsiCo, FizzCo, Celsius. Okay, very good. Let's now compare revenue growth over time. Wow, you have some different metrics. over 20 years, if we compare the compounded annual growth rate. For the first one, Celsius, that is also a company that, just let me check here, Celsius, how is it written? Celsius stock. It's a company that drink products. I don't have the products. That's the stock price. Also wonderful chart. Celsius products. Let's see what we have here. Images. Okay. Soft drink. Energy drink. Okay. Okay. Where is it? Here. If revenue for Celsius Holdings have increased, why is it 0? Let me just start here. So it's not 0 anymore, so that every metric is compared with the same time frame. Okay, let me start this from 2008, so it's not 0 here. Celsius has increased their revenue by 50% CAGR. That's a lot. Fees 5% CAGR. You have Coca-Cola 3% CAGR, so high margins but very low growth. Monster Beverage revenue increased 14% per year since 2008, so less growth compared to the first years. PepsiCo 5%, wow, and PRMW 0% growth. That's great. So no growth for 15 years for this one. So I would not say it's a very good competitor to Monster Beverage. We have these big boys and Coca-Cola. I don't think it's a real competitor. I don't know if that's a real competitor. They are in different industry, and what is strange is that Coca-Cola owns 20% of Monster Beverage, but that's a bit technical, and for beginners, I don't want you to get lost. Just keep in mind that there is some competition, and if you want to do the work and compare different margins, different valuations for these companies, you can. What could be interesting if you don't really know who the competitors are is to go to the annual report, as we've seen it here. You go to the Monster Beverage website, you go to the annual report, and you type competi here, 63, 62. Okay, and there is a paragraph, there are some paragraphs about competition. The beverage industry is highly competitive. The principal areas of competition are pricing, packaging, development of new products, flavors. Okay, okay. Who are the competitors? Juice cocktails, that's the okay, they mean that they are they mean that they are in a competitive industry for many products. Okay, competition. If I type competitors, what does they say? Our products compete with all liquid refreshments and in many cases with products of much larger and in some cases better financed competitors, including the products of numerous nationally and internationally known producers, such as TCCC. What's that? Copy, paste. What's that? TCCC. Company. I don't know. That's the Coca-Cola company. Okay, so let's go for Coca-Cola company. PepsiCo, this KDP. I don't know if it was included previously in the competitors. KDP and Red Bull. Okay, so that's the bigger competitors that they have. Domestically, our energy drinks compete directly with the Red Bull, but other brands, energy drinks, Venom, okay, Starbucks, because Starbucks is a company that sells energy drinks also. Internationally, we have other competitive pressures. Okay, here we have Celsius, the company that we've seen on Stock Unlock. Competitors, what do we have here? Other competitors. I mean, you can go for hours because I think in the beverage industry, every company that sells some water is a competitor. Everything that sells some coffee, energy drink, anything that you can drink, this is a competitor. So you will have plenty of competition for this energy drink. Also, that's a good example of company because if you have, for example, if you do the analysis of Google, you will not see these many competitors because this is the main search engine with, I don't know, 95% market share, Google. And you have maybe Bing, maybe ChatGPT that may take some market share, but not a lot of companies. In that case, for the beverage industry, you have a lot of competitors. But the main one are Red Bull, PepsiCo, Molson Coors, Constellation Brands, Coca-Cola, as we've seen before, AB InBev, Boston Beer Company, okay, Celsius, Prime, okay, very good. Lots of competitors, okay, 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 okay.
And if you want to see more competitors, you can go to FinChat, click on the industry tab, and you will have plenty of other companies where you can compare the growth, the return on invested capital, the valuation. It's pretty useful and you can get a lot more investment opportunities like this.
Now that we've seen there are some great competitors, some of these companies are really good. If you look at Celsius company, that's a very good company. If you look at Coca-Cola, well, that's a very good, very famous, with a renowned brand. That's a very good company. So how do you differentiate them, and how can you say that Monster Beverage has a moat? How do you see the competitive advantages? You know what? Let's just competitive advantages. If you just write competitive advantages in the annual report, you have some paragraph, value drivers of our business. We believe that the key value drivers for our business include the following. Okay, so you have some international growth. So what can differentiate Monster Beverage from other companies is that they sell their products to more than 150 companies. Profitable growth, so with high margins. Cost management, so there are some disciplines, sponsorships, okay, here. And what do they say? Efficient capital structure. We believe that with our strong capital position, our ability to raise funds, if necessary, at a relatively low effective cost of borrowings provides a competitive advantage. What they mean is that they don't have any debt, they are in a very healthy position, and they can take more debt if they need. They can borrow some funds if they need, if they find a good opportunity in the future where they are very healthy. So that can be a competitive advantage compared to competition. What you can also do is compare these companies, which are the main competitors, and you compare the return. Let's just write raw like here. Okay, wow. Oh, wow. Okay, let's just see here what we have. Oh, we have minus 200 for Celsius company stock. The Celsius stock has done beautifully since the pandemic, since 2020. But before that, it was absolutely horrible. So I think there was a major change in 2020. But before that, it was a terrible business. So if you want to compare it with Monster Beverage has been profitable for 30 years in a row compared to this one. Let's compare the recent years where the gap is not wide. Even these previous years, you see that Celsius has a very bad return on invested capital. Maybe that's some accounting issue, but if you want a snapshot, you can get this. Let's just remove Celsius from this chart. You see that fees has a high, very high return on invested capital, above 70%. You see PepsiCo with the 18, 20, 15, 20% return on capital. Coca-Cola with the 18, 19% return on invested capital, and Monster Beverage has 25. So what's happening with Fizz? What's Fizz? Fizz stock here. And you see, as I'm doing this exercise, I wanted to analyze Monster Beverage, but I'm also discovering, different industries and different stocks, different companies. Fizz can be a very good company. And if you look at this stock price, well, if you had invested 30 years ago, you would have, what's that? That's a 40x of your investment. So if you had invested $1,000 in this company 30 years ago, you would have 40x your investment. And their market cap is only 4 billion, 5 billion. That means that they can grow by 10 times bigger, and there will be 40 billion market cap, which is still lower than Monster Beverage. So it could be a good competitor, and it could be the future Monster Beverage. Nobody knows, but that could be a good investment idea. So you can, if I go back to my template, if you like Fizz, you can say this. You can ask the same questions. Do you understand the business? Go back to their website, see what kind of products they sell, see the different financials, the metrics, analyze the numbers, etc., etc. And you can also add Fizz to your watch list. You can have several stocks in your watch list, as many stocks as you want. So Fizz can be a very good investment. And we've seen in the annual report, I don't know where, but in this annual report, Monster Beverage said that what can differentiate them from competition is that the pricing, packaging, something like this. And I believe in the beverage industry that the key of competitive advantages, the key to the moat is this. Okay, pricing, packaging, development of new products, flavors, promotional and marketing strategies. Okay, very well. Let's go right now to Value Investors Club. Investors Club. This is a website where you have articles about businesses. And let's write Monster Beverage here. There is an analysis. Somebody wrote an analysis about Monster Beverage in 2019. Maybe we will find the key competitive advantages for this industry. I suspect that this guy has done more work than me. I hope so. Okay, what does it say? At the time the price was 66, you had a market cap of 30 billion. So in 2019, it was half as big. So what does it say? Summary: Monster is trading at an attractive valuation versus its history and peers because of concerns relative to increased competition. Bang, KO Energy, so Coca-Cola Energy, launch. What's that? Other questions that are raised thanks to an article. Future profitability margin. So people are worried about the future. Okay. PE of 25. Okay. Forward PE 25. Okay. Monster Beverage. So okay. Worried. And here is the pitch. Fundamentally, Monster Beverage generates strong free cash flow and attractive return on equity invested capital. I agree with that, with what we've seen before. The company also has a net cash balance, so no debt and a lot of cash. Well, a lot of cash, that's 3 billion out of 60 billion. So not a lot of cash, but it's net cash. Monster should re-rate higher. That means the PE ratio will go back higher as investors begin to appreciate the continued resiliency of its business. I agree. Variant perception. Monster is able to successfully navigate this period of increased competition. For perspective, they have grown their earnings per share at 20% per year since 2007, as we've seen before. Okay, despite fears of competition, health impact, that's true. That's true. That's another risk. As we have some exposure right now about the risks of obesity, sugar, some people may not like to invest in a sugary drinks company. that could be a quick pass and go back and look for another business. But in this video, that's my analysis. That's just me discovering the stock. What are the risks? So this is a risk. Admittedly, Bank and KO Energy news flow will continue for at least 3 to 6 months. I don't know at all what are these things, but I will look at them later. Okay, Monster has faced various levels of competition, but this is unprecedented. Bang, what is Bang? What is Bang? Bang, I will just Bang energy drink. What's that? What's that? Okay, just another energy drink company. Stock, is it public? I don't think so. Okay, if you write Bang Holding stock and you don't see the stock price, and if you go to Yahoo Finance here and the stock is 0, it means the stock is bankrupt, or maybe they were acquired. Bang Energy Drink, bankrupt. Let's see. I don't know, I don't have the data. Bang and Vital Pharmaceutical declared bankruptcy in 2022. Okay, so the big competition that came for Monster Beverage, well, they disappeared. So that's why you have to just take into account that this article that we are currently reading was written in 2019. So maybe they were very aggressive and taking some market share, but they are not here. And Monster Beverage to acquire Bang Energy. Oh, that's funny. That's funny. Monster Energy bought this competitor here in July 2023. Monster agrees to acquire rival Bang Energy out of bankruptcy for $400 million compared to they had a cash of $2 billion. So that's not a big deal for them. Okay, so the big competition collapsed, and Coca-Cola Energy, I think that's just Coca-Cola, so not bankrupt yet. This is too big. I don't think they will collapse soon. Okay, very well. Okay, highlights. Monster operates in a large and growing end market. Okay. CapEx, capital expenditure, is 2% of sales. We've seen before that the property, plant, and equipment, the 4 plants where Monster Beverage creates the energy cans, well, they don't cost a lot of money. So capital expenditure is very low, and Monster converts 70% plus of EBITDA into free cash flow. So strong free cash flow generation. Strong balance sheet with 1 billion cash and no debt. Well, this is to be updated for 2024 right now. High insider ownership. I don't like what I see. High insider ownership. You know what? Insider ownership. Monster Beverage. Let's see, because we've seen that Coca-Cola owned 20% of the company, yes. And for the co-CEOs, well, they only own like less than 1%. Monster Beverage insiders own 0.4% of the company. Who are the main shareholders? Coca-Cola, 20%. Okay, that's good to know. So it's not high insider ownership. It's just that Coca-Cola has a partnership with them, and they took a 20% position. I would not say it's high insider ownership. Maybe it was the case in 2019, but I don't think that's true now. Or maybe I'm mistaken. Valuation here. Okay, I don't care about it. It's not updated. It was in 2019, so 5 years ago. But valuation, these guys say that it's cheap relative to historical numbers. Okay, as noted above, generates attractive return on invested capital, and we have competition. What's that? That's return on invested capital, and we have Monster Beverage fees, CLX, PepsiCo, EL. What's that? Estee Lauder? I don't know. KO, Coca-Cola, and it's in the higher part, and it's in the higher numbers Okay. The company has been a steady buyer of its stock over time and should continue to repurchase shares opportunistically given its free cash flow generation. I disagree with this sentence because as we've seen over 20 years, the share count has increased for the acquisition in 2015 and then decreased. So it was roughly 1,000 shares. So I kindly disagree with this statement. They have some buyback, but over time, this is not a big buyer of its stock. In summary, this is an attractive risk reward, etc. Okay, risk here, ongoing margin pressure, management succession, competition, I believe. Okay, valuation. Okay, KO relationship, Coca-Cola relationship was the. Okay, let's see. Um, let's look at this KO relationship Monster Beverage. Let's see where this partnership has begun, when it has begun. Maybe this was, let's see, some cookies here. 2015. Maybe it was part of the acquisition. We said it was acquisition, but let's see. The Coca-Cola Company and Monster Beverage Corporation closed on previously announced strategic partnership. Announced today the closing of previously announced strategic partnership. Business transfer, expanding distribution, okay. Okay, Coca-Cola Company transferred ownership. What do we have here? Since the transaction was announced, Monster and the Coca-Cola Company and its bottlers have amended their distribution arrangements in the US and Canada by expanding into additional territories. Okay. You know what? If I don't find the information here, maybe I will find it in the annual report. Coca-Cola. Oh wow, 60 results. Maybe just partnership. Partnership. 1. 3 results. Okay. No, I will not find it. Coca-Cola. Coca-Cola here. Let's see. Let's see. Coca-Cola. Okay. Strategic brands comprise primarily of the various energy drinks brand we acquired from the Coca-Cola Company in 2015. Okay, so I believe in 2015 Monster Beverage bought something from Coca-Cola. Monster Beverage, Coca-Cola. Coca-Cola. Okay. Okay, let's see what we have. That's in 2021. So that's quite strange, actually. Okay, so that's in 2014. Coca-Cola enters strategic partnership with Monster Beverage Corp. Have entered into a strategic partnership, we will see Monster assume control of Coke's energy brands. Okay, so more brands, and Coke assume control of Monster's non-energy brands. Okay, and they have a big stake that we've seen. Okay, this deal is expected to accelerate growth for both companies. Okay. Coca-Cola will pay 2 billion in cash and transfer its worldwide energy business to Monster. So we now know why Coca-Cola has a partnership with Monster Beverage, and we know why Coca-Cola owns 20% of Monster Beverage. They have been a partnership since 2015. But also in 2015, we had some acquisitions. So let's go back to the annual report, write acquisition, and what do we have? Maybe we will just write 2015. The brands we acquired from Coca-Cola at 2015, something else at 2015. In 2015, we acquired various energy brands from Coca-Cola and disposed of our non-energy drink business. In 2016, we completed our acquisition of flavor supplier and long-time business partner AFF. So, if I understand correctly, in 2015, there were two things: a partnership with Coca-Cola and also an acquisition of Coca-Cola brands. Some brands from Coca-Cola. Let's see what we have here. 2015. Nope, 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 nope. You have a lot of information inside the annual report. Segment information. Yeah, they bought some brands. And if you go to the beginning of the annual report, you have a message from the CEO, the co-CEO. And let's see, you have all the information you need, but it's quite technical. And for beginners, I would not advise to go deep into the annual report. But that's because that's an official document. You have what the business is about, the overview of the different products, the industry overview, the different segments. So you can have different kind of revenue for this energy drink, for this energy drink. The corporate history that goes back to the 30s, and then you see the different business deals they did, the partnership with Coca-Cola, and there are some comments about some recent acquisitions in 2022. So I think, if I understand correctly, that all these strategic alliances play a big role into Monster Beverage and in this beverage industry. Okay, okay, fair enough. Fair enough. Fair enough. You know what? Even though this video is for beginners, let's go back to the 2015 annual report. And so we will have an answer to this. Let's go back and say acquisition here. Okay. Okay, we will have plenty of information. What happened in 2015? Because there is quite a big change. Okay, Old Monster, now a wholly owned subsidiary of the company, completed the transaction completed, okay, with Coca-Cola. Long-term strategic relationship. Acquisition. Property, plant, equipment of trademarks. Where is it? Acquisition. Completed the transaction, okay, with Coca-Cola. Also reorganized, okay, Coca-Cola, some merger. Monster Beverage 2015 acquisition. Let's see if there is an article that was written about it. That's in French. Okay. News release 2016. Here, Monster will purchase AFF for 700 million. Okay, we talk about real numbers right now, so that's good. And as we've seen, let's go back to Monster Beverage page. Let's go back to Stock Unlock. Let's go back to financials and see the balance sheet. Okay, so balance sheet, you had some goodwill stuff in 2015, 2016. 16, okay, that's the cash here that decreased from 15 to 16. You have some big acquisition here.
Hi, this is still Chris from editing. I went back to the annual report, and in front of me, I will do it in editing, but you will be able to see it. I have the 2016 annual report for Monster Beverage, and I have in front of me the cash flow statement. So at the top of the screen, you see the cash flow from operating activities, slightly increasing from 2014, 15, 16, and nothing really outstanding for the operating cash flow. But the big change that we see for the cash balance, this is due to some changes in the later part of the statement. If you look at cash flows from investing activities, well, you see there are some big numbers. For example, you see there is a line proceeds from the transfer of distribution rights to TCCC, which is Coca-Cola, for 200K. You have proceeds from the sale of Monster Non-Energy, 200K. That means 400K of cash because they sold some operations, some brands to Coca-Cola. And if you scroll down, you see for the cash flows from financing activities, for the line issuance of common stock, well, they issued a lot of stocks for Coca-Cola's ownership. You have 1.696,661 here, second line of the cash flow from financing activities, which is a lot. And this big share issuance created a lot of cash for the company. That's why at the end of the document, you see the line cash and cash equivalent at the end of the year. Well, instead of having around 300 million, 400 million for the prior year and the next year, for 2015, you have 2 billion. So they raised a lot of cash with these activities. And for next year, why did the cash decrease? Well, you go back to the top of the document, 2016, you will not see anything strange from the cash flows from operating activities. You will have to scroll down and you see that there is the line purchase of AFF assets for 688,000, which is $700 million. So that's a cash outflow. And if you scroll down, cash flows from financing activities, you see a line purchases of common stock held in treasury. That's buybacks. So last year in 2015, they issued stocks and now they do buyback. It's the opposite. And it costed them $2 billion of buybacks. So if you do the addition of all the operations and you add to that the buybacks, you have a big decrease in cash. That's why the cash balance decreased from 2 billion in 2015 to 400 million in 2016.
So let me just close these tabs. And we were still looking for some competitive advantages of Monster Beverage. We've seen a high return on invested capital, 30%, and stable over time. Over 20 years, it has been 30% on average, and a high gross margin at 50%, if I'm correct. And gross margins have been 50% for 20 years. That's a good indication of a strong pricing power. And despite all the inflation around the world, all the recessions, pandemic, wars in the world, the company has a very good pricing power and it can increase the cost of the energy drink. People will still buy it, will still drink it. So that's good. Now you understand the brand with all the partnerships. So they have a digital presence. They have a presence with all sport events, gaming events. They have a good pricing power with high margins, and they operate efficiently with 4 plants at a high return on invested capital. These are good elements of a good stock. If you want more competitive advantages, just put competitive advantages on Google. Competitive advantages, Monster Beverage. Beverage. The intrinsic value of Monster Beverage. You have plenty of analysis here. This is from 2017. Can I read it? Okay, that's good. That's good. Free cash flow. What do they say? Free cash flow is growing fast. Okay. Sorry. Okay. What do they say? Oh, there are so many ads. Okay, growth rate. We've seen this. Pricing. Okay. Monster company. Okay, that's the return on asset, return on equity, operating margins, and net profit margins for Monster Beverage compared to the industry median. We see that the return on asset is higher, way higher than the industry. Return on equity way higher, operating margins way higher, and net profit margins way higher. The competitive advantages, the potential competitive advantages are a good portfolio of brands, okay, large portfolio of brands, but Coca-Cola also has a strong portfolio branch. PepsiCo also. Distribution advantage. Okay, that's a good point. Monster's strategic partnership with the Coca-Cola Company provides it with a superior distribution advantage, both domestically and internationally. That's true. If you do a partnership with the big boy Coca-Cola, well, the distribution will be great. Coca-Cola has been doing this for decades and decades, for centuries, the distribution in the US, but also internationally. So if you do an alliance with Coca-Cola, you will have the expertise and you can have more efficiency if you do that. The partnership gives Monster access to over 200 countries and will be a significant driver of future growth. That's true, and that's part of a competitive advantage over smaller competitors. I don't know, Celsius Holdings or Fees. You have trademarks. That's true. Monster aggressively protects its product and currently has more than 8,000 registered trademarks and pending applications in various countries. So that's good, and that's part of the intangibles that we've seen in the balance sheet. Niche attributes. Okay, let's close this. Let's close this. Niche attribute. Monster operates with the energy drinks niche of the carbonated beverages market with over 90% of revenue derived from this business segment. That's true, they only have a couple of products. Energy beverages tend to be addictive. Okay, caffeine, okay, very good, very well. The risks. Monster could have one of its rivals mount a challenge to erode its competitive advantages. We've seen with, what's the name of the company? Bang. We've seen that they collapsed. So it's not a simple industry. Failure to comply with government regulation. Okay. Regulation about sugary drinks, I believe. Obesity, health issues. And also, I believe that's why they invest a lot in philanthropy, because they want to have a good brand. And some investors will not want to touch a business that sells sugar to people. So you want a good brand, you want to give money to charity to challenge obesity in the country. Okay, the emergence of a serious crisis similar to 2008. Okay, well, that's a risk for everybody. The emergence of negative scientific reports regarding ingredients used in a company products. That's true, but that's true for every energy drink company, I believe. Some people can do the research and find some negative stuff to say about the chemical aspect of these drinks. Opportunity costs, macro factors, summary. Okay. We have seen some other competitive advantages for Monster Beverage. SWOT analysis. You have plenty of free analysis here. Competitive advantages here. No, okay, not this one. Let's see if somebody has to share a SWOT. Strength, weakness, opportunity, threats. I accept the cookies. Okay, you have plenty of data if you want to go deeper. Limited target audience. I want to see the trend. Strong brand, okay? Strong focus on the market. Yeah, they don't diversify into making bikes or I don't know. No, they just focus on energy drinks. Okay, variety of options. Yes, many kind of drinks. Strong intangible asset portfolio. It's also some brands. Strong competitive advantage. Okay, thanks to trademarks, the brand. Broad product line. Okay. And with all these free articles, you can get plenty of good information about the company, the history of the company, the management. By the way, I'm intrigued by the two CEOs. So, management, Monster, beverage. Let's see. Our team. Employee training. No, no, no. Diversity. No. I want management. Management. Where is it? Contact. Brands. Press release. Presentation. Corporate governance. I don't know. Company profile. Yes, I agree. We are on Wall Street Journal and co-CEO. Co-CEO. Okay. So we have two CEOs, Rodney and Hilton. They are not related, different names. Okay, so let's see since when This guy is CEO. CEO CEO of Monster Beverage since 1990. And Hilton, let's see since when. And I see here in French 1990. So they are two CEOs that have been in the business for more than 30 years. So they know what they're doing. And over 30 years of this management, the business has been growing quite well. Strong revenue growth, strong earnings growth, despite all the threats of competition, well, the business has managed to be strong and stronger and stronger without any debt. So with all cash that generate every year, they do strategic alliances, strategic partnerships with the big boys, with the Coca-Cola. They do some acquisitions, but I would say small acquisitions. For the goodwill, it's 1.5 billion. And if you compare 1.5 to the market cap of 60 billion, that's a small acquisition. That's a small goodwill. The main focus of the business is the energy drink, is the distribution to 150 countries, is the strategic partnership with Coca-Cola, and that's it. That's it, with the strong management that has been here for over 30 years. Okay, let's go back to our template. This is a video for beginners, so I won't dig deeper into competitive advantages. But if you want to go deeper and analyze in details the competitive advantages and the moat of a business, I will do a complete course on competitive advantages inside the Skool community. There is a link in the description below. If you want to join the community, the Skool community, it is called the Investing Masterclass. You will have many Q&As, personal coaching. I will teach you exactly how to identify a good stock opportunity, and you will have a step-by-step guide how to buy good stocks in the stock market. And Monster Beverage could be a good opportunity for the future. If you're inside the Skool community, you will be able to exchange with other like-minded people if Monster Beverage is a good business or not. And we will all do the analysis together. After this step of understanding the moat of a business, let's do a valuation. I believe that Monster Beverage has a moat because the brand is very big and Coca-Cola understands it with the partnership. They are available in many countries, so they have a distribution advantage. They have been there for a long time. Everybody knows Red Bull, everybody knows Monster Beverage. I think there is a moat that allowed them to have high gross margins at 50% per year for 2 decades. Instead of going bankrupt, well, they increased the price of their energy drinks. The moat allows them to have good operating margins. The moat also allowed them to have high return on asset, high return on equity, high return on invested capital, and I would say a sustainable profitability. It would be very easy to say, okay, this business has been profitable for 30 years. In the future 5 years, it will continue to be profitable. They will not be at a loss in 5 years. Yes, we saw a drop in 2022. By the way, let's just check out if there was a loss or just a fall in earnings. Let's check if this rebounded. Yes. Okay. Even though there was a dip, the business was not at a loss. Earnings decreased from 1.5 billion to 1.2 billion. Okay, that's reasonable. And now the business is back on track. So no worries about it. I'm pretty confident that in 5 years, the business will still be profitable and growing nicely. If you go to this template, if a business has a moat, it deserves a premium valuation. Let's go to Stock Unlock. Let's go to Stock Unlock. Where am I? Here. Let's go back to Monster Beverage tab. View in DCF. We've seen a P ratio at 40. Personally, it's expensive. For me, it's expensive. And let's say that free cash flow over the next 5 years will grow. They have grown 6% because of this big dip. Okay. So if you average everything out and if you focus on net income, okay, 10% growth. If you think that the business will continue to grow its earnings at 10% per year for the next 5 years, do you think it will have some buybacks? No, no buybacks. And I think the price in 5 years will be at the average of 30. Okay. That means that right now, for me personally, the business is overvalued. And to reach fair value, it would mean a 20% fall in the stock price. If I want a valuation of 25 for this business, and I think in 5 years it will go back to a P of 25, well, I would have to expect and pray for a 35% loss in stock price. Definitely overvalued for me. Definitely overvalued for me. And this is the price for the fair value. If I want to buy with the margin of safety, I don't want to buy the fair value. I want to buy a lower price. So I don't want to buy the stock when the price is at $40, but I want it at $30. And if you have, I don't know, let's do $30, it means it has to be cut in half because the stock price is $60 per share. I don't know. It's up to you guys. If you want a big margin of safety, if your future forecasts are low and you don't think the business will grow nicely, and instead of, let's go back to a P of 35, okay? If you don't think the business will grow its earnings at 10%, but only 5%, instead of being 10% overvalued, it's 30% overvalued. If you think there will be some buybacks, it might change. If you think there will be share issuance instead of buybacks, it might change. That's your estimations. But if you want my guess, that's personal. If for me, if I want a P of 25, it's 30% overvalued. And if there is some buyback, it's again 30% overvalued. So definitely overvalued for me, and it's a pass. You go back to your template. If it's cheap, it's a buy opportunity. And if it's expensive, you put a target price and monitor it from a distance. So I have added Monster Beverage on my watch list on FinChat, and I will put a target price of $30. And if there is another pandemic, for example, or an issue, a problem with the company, with the strategic partnership with Coca-Cola, I would have a fair idea of, okay, this business is growing nicely, this problem is temporary, and this price is the price I'm willing to pay for this business. I will write 30. If the stock price reaches $30 per share, I might be a buyer. That's it. If you've done this, you will have done more than 90% of the investors. You will have seen a lot of things. You will have understood a lot of things: the competition, revenue growth, the management, the partnership with Coca-Cola. Why does Coca-Cola owns 20% of the business? The distribution, different products, the forecast, the moat, the brand, the pricing power, the different margins over 20 years. We've seen everything. And if you're a beginner in the stock market and you want to invest in stocks to build a strong portfolio, I think it's a very good exercise. I think you will learn a lot if you do this. And you've seen that we've compared the company with competition. And inside the competition, we've seen some interesting companies. Celsius Holdings growing really fast. But before, they were at a loss. We've seen fees. I don't know fees at all. So I might do a deep dive for the fees or for Celsius. Maybe, you don't know. There could be some opportunities inside the competition. That's how you can generate ideas. And yeah, I've put in the template here. If you still haven't found a good opportunity, analyze every competitor of the companies you saw. So when you do some research about a company or the company, check out the competition. Maybe you will find some good opportunities. And that's it for this video. I hope I've been helpful. If you like this kind of content, please click on the like button and subscribe to this YouTube channel. And if you want to go deeper and you want to take investing seriously, I encourage you to join the Skool community. This is the first link in the description below, where you will meet more than 100 members, like-minded members, and we all share investment ideas like this. There are many Q&A calls, personal coaching, and plenty of other modules, courses that are not public on YouTube. And there is a guarantee. There is a 2-week guarantee where I will reimburse you 100% if you don't like it. So just check it out. Click on the link in the description below. Just register on Skool, exchange ideas with others, participate in the Q&A calls, and see how it goes. And if you don't like what you see, well, I will reimburse you 100%, no question asked. That's as you want. My goal is to make you a better investor, and I think that's a great tool to all learn how to invest. I see you in another video or inside the Skool community. Bye bye.